All right, good morning, guys, and welcome back. Yeah, so a lot have happened after the last analysis we made on 20th of January, which is 2 days ago. Right, so this is a trade we called, and it's actually playing. We call this trade live. Yeah, so and I made analysis. The analysis behind this trade are going to be. In case you guys don't know what I'm doing on this channel, I usually come out and give you guys read market structure live and come up with setup. So this is the only channel you need to master market structure because I'm going to be coming out every 2 to 3 times a week and be giving you guys reading market structure, updating you guys on the trade, posting setup and updating you guys on the trade that we are looking to take. So if you guys are interested, if you really want to master it, I suggest you have one mentor. Just subscribe to this channel, unsubscribe to any other thing, and just join the free Telegram channel. And I'm going to keep on giving you guys updates on the trades I'm looking to take. This is actually the trade we called in the last session we had. Right, so let me explain what we had here. What do we had here? I explained to you guys in that last video that price is in an uptrend. We have higher high, higher low, higher high, higher low, right? So price now comes back down and make a final higher high as a break. This is called a break of structure at this point. What we have here is a break of structure. Let's mark it out. So what we had here is a break of structure. Now notice what price did here. Price, instead of it forming a higher low and continue break the next structure, it went down and break the previous higher low, right? It break the previous high low. When price break this previous high low, what we have is called a market structure shift. That means you are expecting price to continue to the other side. Now let me explain this thing with a graphical explanation, right? With a schematic diagram. Now this is what we call a market structure shift. Imagine price in an uptrend forming series of higher highs, higher lows, higher highs, higher lows. Now price makes the final higher high. Now break structure, break the previous higher low. This break of structure here is called a break of structure. This is called a break of structure. This is called a break of structure. But when price break this last higher low, this is called a market structure shift. And you're expecting for price to continue to the downtrend. And something else you want to look to validate this and to make sure this is high probability and not just something you want to use to make sure that this is high probability. You want to see this happening in a higher time frame key level. So this usually happen in a higher time frame key level. If it's not happening in a higher time frame key level or maybe in an all-time high, this might just be price taking out inducement to taking out this inducement because this is actually an inducement to continue to the upside. So what you have is price continue to this place. Don't worry, I'm going to explain more on this inducement stuff as we progress. Yeah. So now this is what we had here now. We have price. Immediate price break this structure at this point. We have something called a market structure shift. Right, let's get rid of this, or maybe let's just hide it. We had a market structure shift and we're expecting price to continue to the downside. So now what the price did here? Price comes, gives us, starts forming lower high and lower low. So after price forms lower high and lower low, after it break the structure. Now notice what we have here. We have this other block, which is the last candle before the break of structure, the last candle before the break of structure. So this other block actually, and the next thing we have is a structural liquidity, right? So this other block had three things. One is swept liquidity. The reason why we took this other block is because of three reasons. One is swept liquidity. We swept liquidity at this point. We had a liquidity sweep tap into a key level. Why is this liquidity sweep key? Because of if smart money wants to move price to an intended direction, it must take out liquidity. Once it take out liquidity, that's a sign that price has uh, has food traders to the other side, so it wants to continue to the downside. So this liquidity sweep makes this other block a strong high probability order block and this high a strong high, right? So the next thing that is actually tap into a key level. So because of three reasons that we took this trade, actually four reasons, we have a liquidity sweep, it is in a key level, it tapped into a key level. Then we have an actual break of structure. Notice it didn't stop around here, it actually break the structure. Now it continues, and we also have a structural liquidity. So that's the two reasons why we took this trade. As you can see, this is a beautiful trade. This is already giving us a 4 hour, right? So if you have deposited let's say I don't know your account size, if you have reached $1,000, you'll be making $4,000 from this particular trade, and we are targeting the external range liquidity, right? We can actually extend this all the way down to this place. Yeah. we like extend this all the way down to this place to around 8 hours. So if this trade to 8 hours, that means if you deposited $1,000, you're going to be making like $8,000. So this is the trade that is currently active. We also caught a couple of trades, right? There's one that was a loss. Let's go to that one that was a loss, and let's try to make explanation to it. So this was one that is a loss. So what really happened here now? We had price in an uptrend, in a downtrend, switch uptrend, then it switched to a downtrend after this break of structure. This after price break the last higher low at this point, it switch structure. After price breaks this last higher low, so we are expecting bearish prices, but we don't just expect bearish prices. We are looking for more reasons to validate this other block we are looking to trade from, and the reasons was that we got was a liquidity sweep into a killer, which is a breaker block, and um a break of structure, right? So and structural liquidity, right? So with this reason why we took this trade. But something I know some of you or some of ICT trader will try to justify this trade or try to make explanation to this trade. And there's a lot of explanation you can come up with. You can actually say, okay, price wants to take out this high or trade to this one other block. But in trading, or if you want to succeed in trading, you don't want to always give and try to justify everything. You don't want to always try to get perfection. You can't get perfection. This is just a time where my strategy fell. Yeah, it fell in this point. I can't say, I would have taken from this place. This is the rules of my strategy, and it just fell in this place. I take it, but I was swept out. If it was swept out, price want to tap into this other block or something like that. So what usually happens to newbie trader, which is something you want to avoid, is that they come and see this and say, okay, look at what price did. Price actually take out this high to tap into this other block. So next time I see this thing, I will not take from this other block, rather I will take from the higher, or they'll try to create new lows and edit their trading plan. No, this trade was good. It followed our rules, but it failed. So we leave it is a loss. So this the main reason why I took my time to explain this loss is for you guys not to say my analysis was bad. My analysis wasn't bad. I followed my rules, but this trade didn't play out well. So this is just variance, right? Now the next one we have was the rest have not yet actually played out, right? So the next one we have Euro JPY. We have something on Euro JPY, and this is what we have there. So we are looking to take this trade. Why do we take this trade? Now, reading the market structure on the daily time frame, let's use the daily time frame, which is our high time frame. Right. So we have a break of structure at this point, right? We have higher high, price break structure, and then forms a higher low, higher high, break structure here, higher low. You know the normal this thing, high highs and higher lows, higher highs. So after price break this last structure, we have this last swing high, swing structure. Our swing structure is from this high to this place. So price now gives us a final break of structure. Now what I'm expecting or what I'm seeing here is that this last break of structure. So this is our which time frame should we use? Okay, let's just go down, step down a bit to the 4 hour time frame. Let's see if it's clear now. Okay, so what do we have here? We have high, then price retrace and break structure at this place, forming a higher high. Then price retrace and break structure at this place, forming a higher high, and retrace, forming a higher low, forming a higher high. So our current swing structure is actually from this high right here to this low. This is our current swing structure, right? And some of you might be asking, then why didn't I choose to trade from this other block? Rather, I'm looking to take from this other block, this one. This because this is our current swing structure. I should be taking from this other block. So why I didn't take from this other block, and you can see this other block played out fine. Why I didn't take from this other blocks, like as I explained in the last video, is that it didn't meet our criteria. Our criteria for valid order block is one, we want to see liquidity sweep. Yes, we have liquidity sweep. Two, we want to see it tapping into a key level. Yes, we tap into a key level. Three, we want to see that it actually breaks structure. Yes, it breaks structure. Four, we need to see structural liquidity, and I cannot see that structural liquidity. That structural liquidity is what price we take out. We are expecting that structural liquidity, that inducement liquidity, because price needs to take out this liquidity. It needs to take out that liquidity. Then that will be the catalyst to this expansion. So I don't trust this trade because of that structural liquidity. But in this case, it just played out nicely and would have been in this trade and made money from it. But do I care? No, I don't care. It didn't hit my plan, so I won't take it. So now, why do I think this one trade is valid? Now, I believe that this whole thing, this thing is going to serve as an inducement for price to take trade to this other block. Because we have a valid order block here. Why is it valid? Number one, we have liquidity sweep. Two, we have price. It's tapping into a higher time frame key level, which is this breaker block here. So it actually tapped into a breaker block, and it breaks structure. Yes, actually double structures, right? So the order block is valid, and so has structural liquidity. So the reason why I think this trade is valid is I'm believing I think this low is going to serve as an inducement. Let me explain what an inducement is for you guys. So we are familiar with this normal market structure, right? Higher highs, higher low, higher high, higher low. Everybody have become familiar with it. Smart money traders, they have everybody, even retail traders are not trading like this. But the problem is that smart money have actually noticed that traders are familiar with this, and what they usually do is they just wait for price to break structure, then they'll buy from this point. Wait for price to break structure, then they'll just buy from this point. So they keep doing this thing. So what smart money now does is, instead of them trading to this place, instead of them trading to this other block right in this place and continue to the upside, what they are going to do is they are going to come down a bit. They are going to, instead of them trading to this one, they are going to take out this one, this previous higher low, then trade to the next structure, right? The next other block that is lower. So it will take out this liquidity, trade to this one other block, and continue to the upside. That's something that a pattern they're not doing, right? So they're going to take out this liquidity and tap into this other block. This liquidity that was created here is actually called inducement, right? Is it called an inducement? Now, back to that thing that I told you guys in the beginning of this video. I told you guys that's why when, okay, let's try to draw this. That's why I told you guys that even after I see a market structure shift, I like to validate it because of now. Remember what I told you guys? This is an uptrend. So price comes down and break this structure here, break this previous higher low. So at this point, we should call this a market structure shift, right? We should call this a market structure shift based on what I've been teaching you guys and the rules I gave you guys. We should call this a market structure shift. But in some cases, this is just price taking out this inducement liquidity to tap into this next order block that is a bit lower. This next order block that is sitting at this point. So this is why I told you guys you need to validate this structure, right? You need to validate this structure by looking for this thing to be occurring in a higher time frame key level. Sometimes it can be in a higher time frame case. There must be a catalyst to the reason why price wants to trade lower. It can be that price has hit a higher time frame key level, or it can be that price has traded so high that it's at an all-time high and it wants to, trade lower a bit to take out this liquidity. So this is the explanation that I gave you. I'm trying to explain in the first video. So this is why you need to validate this market structure shift, because I actually told you that if price break this low, it's a market structure shift, right? If you break the previous low. But in some cases, it might be price just taking out that liquidity to trade to the previous order block, and that's why you need to validate it to be able to see which one is a valid order market structure shift. This inducement can actually come in two ways, right? It can be price. Sometimes it can form in this way, like you can actually have a bit before the break of structure, the inducement is formed. This is where the break of structure occurred at this zone. Let's try to mark it out. This is where the break of structure occurred at this zone, right? So sometimes it can form, this inducement liquidity can form before the break of structure. Then you can expect price to trade something like this. Right? So this inducement, in this case, you can see that it formed before the break of structure. In some cases, it can form after the break of structure, right? So in this case, it forms a double break of structure. In this case, it's actually one break of structure because of it formed before the inducement, before the break of structure. So if you guys want me to make a dedicated video about this inducement, I want you guys to leave a comment section comment in the comment section and also like the video. I want you guys to let me know in the comment section if you want me to make a dedicated video on inducement that I'm going to make it. So I hope you guys understand the whole context. So now back to this trade now, you can see that this is actually our swing structure, right? Price have break structure and most time we are expecting to trade from this place and continue to the upside. But I believe that price is going to take out this low as an inducement, take it as an inducement liquidity to continue to the upside. In this case, this other block worked, but I prefer to take trades from this place. And we're going to keep watching this trade. As long as it didn't break this structure, if it breaks above this high, then we are having a new higher high. Then price trading all the way down here. I don't vibe with it. I'm going to delete this limit order. So that's it on Euro JPY. And there's another trade we are currently at, I think Euro GBP. Okay, so this is a trade that we actually had, right? So this trade is a trade I'm going to be deleting because of we didn't get the retracement and it really expand higher. But let me also explain it so you can see, because this was a good trade. You can see that price this is a higher time frame market structure, right? Let's go to the higher time frame. So what do we have here? We have exactly what I taught you guys about inducement. We have this inducement liquidity that was formed before the breakout structure. So this smart money created this move. Why? To lure traders into thinking that this is ready to trade buy off from this other block. That they put this leg of price so retail traders can buy off of this other block, right? And you can see what price did there. It took out this whole other block and trade to this previous one. Now this is a key level. So after we tap into this key level, we're expecting a reaction from this place to continue to the upside. Remember, higher high, higher low, higher high, higher low, higher high. So we're expecting a move to the upside. So now on the lower time frame, we are looking for some kind of lower time frame entry confirmation. Let's check the 3 hours time frame. So what do we have here? We have price sweep liquidity, then break structure, then forms a couple of structure. I think this is the 1 hour time frame. Let's go to the 1 hour. So after a shifted structure bullish, so notice what we have here. We have price sweeping out liquidity, then break structure. After price breaks this structure, it have not break the structure at this point. So it first and form the structural liquidity, then break this structure at this point. You can decide to use your horizontal line to shake it. You can see these are just weak. We are looking for a break of structure. We want to be systematic. There's no break of If there's no break of structure, whether it's a weak or nearly break, as long as if there's no break or there's no it didn't the body didn't close, we have not have a break of structure yet. So this is a case where the structural liquidity formed before the break of structure, right? So after price formed the structural liquidity, we expand to the upside. So what am I expecting? I'm expecting this to serve as our inducement liquidity. So I was expecting for price to come back down, take out this inducement liquidity, tap us in and expand to the upside. But in this case, they didn't play that well. Right, this just expand without giving us the retracement, and I'm not waiting for a new entry, a re-entry at this point. I'm deleting this limit order. Now, yeah, so the only trade that we are active on is currently GPUSD, which is a nice trade that is actually in profit. And yeah, this is a trade that is in profit now. And we are actually active. We are still waiting for Euro JPY or thereabouts. Yes, we are still waiting for this Euro JPY trade. So this is a trade they are active on. So if you're looking for a trade you can actually take this trade, right? It's going to take a while before price trigger us in because this is a 4 hour time frame, but you can actually place it and just stay updated on the YouTube channel, on the free Telegram channel. I will keep updating you guys whether I want to delete this limit order or adjust it or maybe look for new entries. Yeah, so I hope you guys loved this video. I hope you guys love this series. I want you guys to show me you are interested in this series by liking, commenting, subscribing, and doing the whole YouTube stuff. That way I'm going to continue because this is a whole new series that I've not seen on YouTube, but I think it's very good. This is a series that I wish I had when I was starting to learn. This is life mentorship on its finest, right? So do the whole YouTube stuff, and I will, yeah, I'll catch you guys around.